Uh, Welcome back to ICT Trading Concept. So this is the last hour of the first trading day, and I have already described the entries over here. This one to my life. Right now, I'm thinking that market is going higher. I will just say you full setup right now. First, I want to show you how I explain things. How do I see the price? Okay. In my opinion, this is the sell side liquidity has taken, and this is my market structure shift. See, very clean market structure shift. There is my fair value gap over here. This is the first fair value gap, and just let me mark it. So this is my first fair value gap. There is another fair value gap just below the fair value gap over here. That should be worked as a I fair value gap. Okay, so this is my not I fair value gap. It's the breakaway gap, though it's very small. Now price is actually falling, and it has some bicep liquidity over here, bicep very clean bicep liquidity over here, and above that level there is another bicep liquidity. I'm not going to take buy over here. You can see uh, as because price is falling, I need to see first if price would love to go higher. It has to break this high. It is the first day of the new year, so the price is little tricky. I need more confirmation that price is willing to go higher. That's why I'm not going to take my entries over here. If market would love to go lower, it will break this low. Okay, see this low. Okay, over here. So it will break this low, and then this sell side will be triggered. If it want to go higher, then it will break this high. I will take my entry after that. Okay. Now, why? What is this level? Let me go to the 15-minute chart. Here's the 15-minute chart, and you can see this low. Price just came below that low. Here is my sales and liquidity. I just marked it from here to here. Okay. Now it is not a swing low, but if I go to 1 minute chart, I will get a swing low over here. But price is not. I mean, my subscription is not going to provide me the 1 minute time frame price action over here. So I I'm not able to show you this this low from the 1 minute chart. But trust me, there will be a swing low from 1 minute chart. Below this swing low, there is a very nice fair value gap. And look over here. Okay, so over here, I am just waiting for the further price action from 1 minute chart. Is it the market structure shift or is it the liquidity taken? I'm not sure. Okay, so I'm waiting. I'm waiting for further price action. I will watch the price over here very carefully. Though I want to see price should go higher because price is just falling. That's why I want to take a buy, but I'm not going to take my buy over here. Okay, I want to wait for further price action. If this high is broken, I mean if the body close above that high, I will take my buy. If price does want to go lower, it will break that low. That is my condition. Let's see what price do. I will take my entry in front of you. Okay, so I got this break. Now I will wait until this candle close. I want to see where it close. Let's see how it close. I mean, it's already confirmed that market would love to go higher, and this is the water block level. If if it can make a fair value gap over here, I will take my entries over there. Though if body close above that high, that is more confirmed price action. Okay, so here, so I took my entry to this level. Okay, so this is my order block, and I will put my stop loss over here. I am going to use the standard deviation as the buy side liquidity is very so too far. Okay, so I would love to go until the 1.5 over here. That will be my target. If I'm stopped out, okay, I will be cool. It will be cool. I don't want to be stopped out. I don't want to see price will come to this fair value gap, the lowest fair value gap. Okay, here. I don't want to see it come over here. Even I don't want to see it just touch the above level over here. I don't want to see that. It can't go below that fair value gap. No, it should expand higher now. And let me actually mark the mean threshold of the order block. Sorry, here. Okay, so that is the 50% of the order block, and it called mean threshold. This is the mean threshold of the order block, and I don't need this one. Look, this is the sell side liquidity taken. This is the market structure shape. This is the first fair value gap. This is the last fair value gap. When price came here, I didn't take my entry because I was needed more information. So I was waiting until this high and that high. I mean that low. I need to see market really would love to go higher, and when it has broken that high, it is confirmed that market would love to go higher. Okay, so I was waiting for some kind of confirmation. This is my confirmation. Then I tried to took my buy to the order block level, and now I want to see some kind of expansion higher. Okay, like some kind of way bigger. This is the last hour of the first trading day, and trust me, brother, it's very difficult to trade, very difficult to read the price action. But if you can read the price perfectly, if you can wait until the perfect price action, I believe in days, not the first day, I mean any days, it will be easier for you to trade. See, I put my stop loss just below that low because this low shouldn't be broken now. If it is broken, then market has 90% of the chance to I mean expand toward that sell side liquidity. Okay, I mean this low, because in that case I will see this is actually the market, I mean the liquidity taken, and that will be the market structure shift, though I really don't want to see that. That's why I put my stop loss over here. I took my buy over there, and right now I don't want to see market will come to this level. I mean the lowest fair value gap. I really don't want to see that. I have already explained my previous entry to my life. If you were with me to my life, then you already know how did I read the price over there. And I actually love to actually record my trade and then upload it to my Twitter. But I thought, okay, it will be much more easier, or you know, to explain the things when I take my entry. Now I'm using the paper money because I have already explained why I really don't want to use my live money, because I I can't distracted by anything when I take my live entry. Okay, that's why I use paper money. I have decided to use paper money when I will describe, or I will try to explain things for all of you. So don't think it doesn't work to my live money. I have already proved that it's the same thing when you will take your entry to your real money. it's the same thing. Okay, so this is the expansion. I wanted to see this type of big run, and here I'm now going to expect some kind of breakaway gap. I mean, it will make some kind of fair value gap that shouldn't be traded. Okay, so I think it's gonna be the breakaway gap. So I am just going to mark it as like this. I don't want to see it unfilled. Okay, I wanna see this will be filled. That means a little portion of this fair value gap should be unfilled. And look at this high over here. When price will come here, I will put my stop loss to the break even. So if I'm stopped out, it's okay. Here the rules is if you take more entries, I mean more contract, more than one contract, then you have to take the partial over there. As I have taken one contract entry, so I have no chance to take the partial. So I will just use my stop loss. I mean I will trial my stop loss in a rule based way. Okay. Now price coming lower, I'm not thinking that it's gonna trade this level gap. I want to see it unfilled because that should work as a breakaway gap. I explained the breakaway gap to my channel already. If you are confused, please watch that video. You will find it inside the study section, I think so. Yeah, it's inside the in the what to say the study section. Okay, so I don't need that thing. And here this variable gap, that variable gap, I've already explained that. Now here is the breaker as well. I mean low, high, low, low. Which one is the highest body? I mean the body close. Okay, so this is the highest high. Okay, when this high has made, after that high I have this candle, or you can say the consecutive candle, these two candle, are they my breaker? No, they are not my breaker, because though this has made the highest high, but this is the highest up close body. See, this candle closed over here, so this is the up close body. Okay, so that should be my breaker, here to here. So that should be my breaker. I know it's a big breaker, but rule based way, this is the breaker. I took my I put my stop loss over here, just below the breaker constant encroachment, or the mean threshold of the breaker. So I put it over there. Sorry for my voice. So this is the first time I am just explaining my entry, and I'm recording it at the same time. So I am a little bit confused because I'm just watching the price and talking. So it's gonna be little bit difficult for me to do two things in one time. Now it came here, it's okay. What I don't want to see, I don't want to see that this gap will be broke. I mean price will trade the full gap. It has to leave some portion of this gap open. Okay, that is the thing I want to see. Let's say how does it trade over there. Okay, it has just broken the things. Okay, that's good. So there is another gap over here. I will see this gap as well. And I know it's a very small gap, but I want to see any of this gap should be act as a breakaway gap. I thought it will act as a breakaway gap, but it is what it is. It didn't work like that way. And now I will see this gap, and I will put my stop loss just below the mean threshold. Okay, this is the mean threshold. So I'm just going to put my stop loss over there, because price shouldn't come back again to this mean threshold. It shouldn't come back. But yeah, it can come back again to the order block. I mean retest order block. though I don't want to say because this is the last hour and it's almost what time is it? It's 3:36, so very near to the closing session. It should be hurry to reach some specific level. That's why I don't want to see that. But if it goes like that way, it will it will work that way. Okay, it doesn't matter. Okay, so it has just broke both of the variable cap. I am just going to remove those that level. Let's see if it works or not. So I'm going to see the water block. Maybe it will trade this water block one more time. I mean retest the water block. It can do that. What I don't want to see right now, the mean threshold. This mean threshold shouldn't be traded. If it trade, maybe I will take a loss. There is 90% of the chance that I will take a loss if it come back to this mean threshold. Okay. Now let me actually see how much was the run. It was 1600. It was very good run. That should work as an inversion fair lookup right now. IFPC. So that fair lookup should work as an inversion fair lookup. Yes, the thing is, price action is something you should work with. Okay, with it. You should work with it because if you don't wait for the perfect setup, look over here. I didn't do anything over here. Though I saw this setup was very clean. And let me just mark this setup and let it happen over there. What it is doing over there. It has taken the sell side liquidity over here. Then I got the market structure shift and I'm just going to this. I mark this one as my market structure shift. It's not wrong if you mark that low. I mean, for shifting market structure, it's not wrong. Okay. After shifting the market structure, there was the fair value gap market. So that was the fair value gap. Now, if you took your entry over there, the sell entry when price came here, if you put your stop loss above that high and you target this sell side liquidity, it's not wrong. I'm not telling this is wrong. Okay, so it came to the water block one more time. What I don't see is mean threshold. Mean threshold, it shouldn't trade this mean threshold. I am very much confident that market will go higher. So I take re-entry over here when it has tested this water block. Okay. So I took re-entry over here. I mean, I have added one more contract over here. Let's see if it works or not. What I was talking over here. So that entry was perfect, but I didn't take that entry because that is very near to 3 macro. I mean 250 to 310 macro. So I didn't believe this will work, but it worked perfectly. It came here. I let it go. And after coming here, when it has taken the sell side liquidity from that swing low, you see how beautifully it has taken the sell side liquidity over here one time. Then it went higher, it went lower. Take the sell side liquidity one more time. After that, this is very clean market structure shift. Okay, very clean market structure shift. One fair value gap, two fair value gap. Now, this run is confusing. I know sometimes you guys will be confused for that type of run, but it happens sometimes. That's why didn't I didn't do anything over here. Instead of that, I wait until this high is broken. When this high is broken, I got confidence that market really would love to go higher. So I tried to take that my entry at the water block level and then price went higher. It came back again to the water block level. I mean, in my opinion, this is the retest. It has retested the water block. Then it started to go higher. Let's see how it worked over there. And when price came here, I added one more contract over there. Okay, so this is the way. Now this fair value gap should work as the inversion fair value gap. Why this one should work as the inversion fair value gap? Because when price went higher, it came lower. I want to see it will go through this parallel gap. Now I don't know it is going to act like that way, but what I want to see is it will go through this, then it will come back again to the inversion parallel gap, then it will take that. I mean, it will go over there to the standard deviation minus 1.5. Let me show it to you one more time. So this is the lowest low, this is the highest high, and sorry, not that one, uh, the normal one. Okay, so there is one level over here minus 0.5. When it is broken, it came here, and it made me more confident that market is coming to the minus 1.5. This is standard deviation point. I saw most of the time price at least come to this level. So I decided to take put my target profit over here. Now, as I have now two contract, I'm going to take one of my partial over here. When this high, this all of this thing will be broken, I will take my partial over there. Okay. Look, it has, just let me remove this one. This is not important anymore. So it come back again to the breaker high. Also, it has come to this fair value gap. So there is a very small fair value gap. It has come to this fair value gap as well. I'm just going to remove my fib and sorry, not that one. This is the fib and the breaker because I have too many line over there. So this is the fair value gap. It is trading this fair value gap. That's good. What I want to see it will go through this inversion fair value gap. I mean this fair value gap. When it will go through this fair value gap, it will work as an inversion fair value gap. Right now, this is not inversion fair value gap. When it will go through this, it will be the inversion fair value gap. Okay. Right now, it is just a fair value gap. So don't be confused. What I am expecting, I have just write it down over here. If it can go through that, this will act as the inversion fair value gap. I am not going to move my stop loss to the break even because price can just come back again to this gap or the water block level one more time. Obviously, it can do that. So I don't want to be stopped out prematurely. When this inversion fair value gap will, this gap will, the price will go through that gap. It will be the inversion fair value gap. Then if it come back again to the inversion fair value gap and started to go higher, I will put my stop loss to the break even because this inversion fair value gap will be my breaker then. Okay. I mean the break it or price can't go through that inversion fair value gap anymore. So when I move my stop loss, it's kind of I'm just trying to minimize my losings, loss amount. Okay, so previously I put my stop loss over here. When I put my stop loss over here, just below the min threshold, my stop loss is my losing amount is now $300. Okay, so if I can put my stop loss to the break even, I will be, I know what to say. I will be out of risk. That means if I'm stopped out, still I'm not going to lose anything. Though I'm not going to get any profit from there, but I'm not going to lose anything. Okay, so you can't put it first. So you have to wait for the perfect price action. Then with some rules, you have to trial your stop loss. Okay, so it went through this. I will wait. Okay, there are two things it can happen. Look at that high. If market go above that high before coming back to this inversion fair value gap high, I will put my stop loss over there because okay, so it went through that high. So this is the time I'm going to put my stop loss to the break even, because there is much more possibility that market has taken that buy side liquidity and it will expand lower. Though I don't want to see that. I want to see now it will come back again to the inversion fair value gap and it will use this inversion fair value gap as its support, then it will expand higher. That is the thing I want to see. Okay, so it came here. I'm going to actually take one more entry. I mean one more, I want to add one more contract over there because I believe this is gonna be the support and price can't go through this inversion fair value gap now. It can't go through that. Look at the time. Okay, it's 3:46, so very near to end this session. Okay, so price should go to a specific level before closing the session. It can come here, then it can go higher. It can't do that. That is the reason I believe market is going higher. See how I'm reading the price action. Okay, I know it is a little bit confusing and I'm not a good speaker when I'm just reading the price. I'm not a good speaker in that moment, but I'm trying my level best to explain the things, how I trial my stop loss, how I read the price, everything. Okay, and I would love to sell on contract over here because it went through this and now it is actually, I mean, it's not giving me some kind of big run. So that is the reason I took I took off on one contract sell over here, and I will just put a limit order over there, sell limit over here, one more contract over there, and my stop loss will be to the break even one more time. Okay, so here is the business from today. That was my first, the first entry to the morning session, and here I have already take a partial and I put my stop loss to the break even, so I am safe. If it came back again here, I'm still safe. Okay, so I'm not going to take any kind of loss from today. But the thing is, if you can wait for the perfect price action, there is a very small chance to take some kind of losing entry. Okay, so you should have wait for the perfect price action. Now, if it is confusing for you, let me actually explain the things one more time. It came, let me actually remove this one. It's very near to give me another partial. I believe it will let me take another partial over here. I believe that. But let's see what price did. So this is the 15-minute low, a swing low. Price came through that low. It has taken the liquidity. It started to go higher. So the retail trader, they're thinking, okay, market is actually going higher. So they took buy over there. What price is done? It went through that low one more time. So whoever has taken their buy, they got stopped out over here. After that, it started to go higher. So the breakout trader, they thought support level has broken, so it's gonna be resistance. So they took their sell over there and they got stopped out over here. Okay, so it has just given me everything over here. I'm happy with that. I will just write it down. Boom. Boom. Okay. So the stopped out and the breakout trade, they thought support has broken, so it's gonna be the resistance. So they took their sell over there, they got stopped out. Now when it happened, we saw this is the market structure sheet, as this is not a extreme sales and liquidity. The extreme sales and liquidity is over here. Okay, so as this is not the extreme sales and liquidity, I saw one fair value gap over here, one fair value gap over here, but there is the breaker. This candle is the breaker. I extended the breaker. I was waiting when price came here. I didn't do anything. Okay, I need more price action because market is too heavy and there is a break price liquidity over here. So I just mark this low and that high. If price would love to go lower, it will go through this low, then I will take my sell and this will be my target. That was my thinking. If it can break that high, if the body close above that high, that is more stronger and sign that market would love to go higher, but it is what it is. It is just broken that high. That is also a big sign that market would love to go higher. And then when it came back again to the order block level, though it didn't came, but I just took the entry, but later actually you can see it came to the order block level, and this is the mean threshold of that order block. So I took buy over there. I was waiting, price came here, it come back again to the order block level. It has retested the order block, so I added one more over here, and I put my stop loss. Previously, I put my stop loss below that swing low, then I put my stop loss below the mean threshold because I know, I mean, when price come back again to the order block level, 99% of the time, it doesn't reach to the mean threshold. It reaches from the order block. So I put my stop loss just below the mean threshold and I didn't want to see that price will come over here. When price is falling, that fair value gap, I was thinking that if price can go through that fair value gap, it will act as inversion fair value gap. So when price come back again to the to that inversion fair value gap, after taking that high, it come back again over here. I added one more over there and I randomly took a sell over there. I took a partial because it is the last hour and price should do this type of things. Okay, see that run, price should do this thing over here. When it didn't do that, I just took a random partial and I put another. Over here, if you see the level over here, okay, so to that level I took a partial over there and finally I closed my trade to minus 1.5 standard deviation. Now price is going higher. I'm not upset to miss this run. I'm happy with this. Let's show you the. So this is today's price action. I mean today's business or anything you can see over here. This is this three thing. This three profit is from the last trade and that was the first trade. Okay, so that was the first trade. I explained everything about that trade to my live. I have came to the live. If you were with me and if you were with me in my Twitter, you already know when I did live or I have updated my everything to my Twitter. So I explained this entry and here is the explanation of that entry. So that's all for today. Thank you guys. If you are new, please subscribe to my channel. And if you think it is helpful, you can give me a thumbs up, share my channel or the link that will be helpful for every other people. Okay. Thank you guys. See you. Bye bye.